Welcome to ForexTV.com. It's Friday, March 28th. I'm Remy Hookey for your New York Forex Market Buzz. In afternoon trade as of 1:05 p.m. Eastern Time, Euro dollar is at 1.5762. Sterling dollar is trading at 1.9919, while dollar yen is around 99.50. U.S. equities are trading little changed on the day in afternoon trade following gains earlier in the session. Also earlier today, the euro gained on hawkish rhetoric from the ECB as well as on Eurozone inflation data. But the dollar did see a modest gain, and there was profit taking, even on the heels of weakness in today's U.S. data releases. First, the University of Michigan's Consumer Confidence Survey fell to 69.5 in March from 70.5 in the previous month. Meanwhile, U.S. consumer spending rose by a mere 0.1% in February. This follows the 0.4 gain in January. And personal income rose 0.5% in February, above forecasts, but core PCE posted a 2% annual rate. Today, I'm joined by Matt Kassel, Director of Proprietary Trading at ING. Good afternoon, Matt.
Hi, good afternoon.
Happy Friday, and thanks for joining us at the end of the week.
You're welcome.
Well, in today's data, the Fed's preferred measure of inflation rose at the slowest pace since June of last year, and the dollar did see a modest gain versus the euro. But before we head into the weekend and ahead of a data-packed week here in the U.S. next week, what key themes are playing out for the pair right now?
I'm sorry, say that again, please?
What key themes are playing out for euro dollar right now?
Well, right now, Euro's trading around 157.60. There's been talk of more Euro cross-selling down towards 157 figure stop losses, but right now it seems to be holding in pretty well. I think a lot of the action for the day seems to have subsided. The markets are looking forward to the weekend. I think all the action is really rested today in sterling, not so much euro dollar. Cable has been hit down pretty hard from near 201, the figure levels, down to 199. Data out of the UK has been increasingly weak, and the markets are forecasting 35 to 40% chance of a recession in the UK.
Okay, well, Matt, you did mention the British currency. So, as you mentioned, the pound has declined on the day against the majors following weakness in UK consumer confidence as well as housing data. So what's your near-term forecast for the pound against the major currencies?
Well, I think euro sterling is an interesting cross right now. Today it traded to an all-time high of around 79.30, just shy of 79.30. Previously, the all-time high had been around 79.10 at 12 area. We're sitting above that mark right now. It's 79.14.15, and I think upward pressure on euro sterling is going to continue throughout the remainder of the month in April. This is a real strong trend in euro sterling. It's backed by fundamentals. It's backed by interest rate forecasts, and now some of the data that's coming out of the UK is starting to back conclusions that the UK is going to be more vulnerable to global slowdown than the EU. So personally, when it comes to sterling, I choose to express that in a long euro sterling position.
Okay, Matt, we did have the latest rate announcement from the FOMC last week, but as Fed futures point to continued aggressive easing here in the U.S., how do you see dollar bearish sentiment affecting your outlook for the dollar major pairs in the long term?
I think one of the things I think is really important to try and get a grip is whether or not this is a cyclical or a structural change for the dollar. The long-term prognosis for the dollar, even back 5, 7, 8 years ago during a very strong dollar bull trend, was not good. And while the U.S. still carries a very large current account, and while the EU takes up a larger percentage of overall global GDP, I think you're looking at potential for structural changes in the euro-dollar relationship, not quite so much cyclical. As far as dollar-yen is concerned, I think it's a much more pro-business cycle environment where Japan is really coming out of a funk for the last 10, 15 years, and the U.S. seems to be entering one. So I think overall you're still going to be looking at dollar weakness for the next couple of months until we start to see the U.S. start rounding out some of the fears that exist in the banking market and in the equity market, and we start to see some forecasts for some maybe second half of the year better GDP.
Okay, and last but not least, before we wrap it up for today's interview, let's take a look at the coming week here in the U.S. What will you be watching in terms of fundamentals, and also with non-farm payrolls coming out? If you could briefly give us your forecast.
Yep. Well, everything else in the week, early on in the week, is really going to be much less significant than than the employment data towards the end of the week. I think we're looking at a slightly better factory number orders. The last month's market came out at minus 2.5. I think the market's looking for somewhere around 0.7, 0.8, minus 0.7, 0.8. I think non-farm payrolls is really going to be the leader here. The market's pricing in a negative number yet again. I believe last month was minus 63. Market's looking for minus 53. Anything in the minus 50 or worse category is a really, really bad picture for the U.S. It points to further recessionary indicators. Anything in the positive area obviously supports the most recent GDP figure, which suggests non-recessionary environment, just a real period of slow growth. So I think this payroll data that's coming up next week is going to be extremely important in establishing market sentiment in the second quarter of the year.
Okay, Matt, as always, thank you very much for insight and analysis, and have a great weekend.
You too. Thank you.
This has been your Forex Market Buzz with Matt Kassel, Director of Proprietary Trading at ING. I'm Remy Hokie. Join us later this afternoon for a PM Exchange right here on ForexTV.com.